Hello and welcome to another episode of Frugal Finance. Today we're going to do a portfolio review to see what's happening in the world of Trading 212 and Frugal Finance's portfolio. So without further ado, let's get stuck in. Okay, so this week, whilst I've credited some further funds, one of the main things is I've actually started a pie investment. So this is a dividend pie investment. So I did a video earlier in the week regarding pies and how you can set them up and so on. This particular one is a pie which is split over 50 companies, and they're all dividend paying companies. And the idea behind it is that these dividends are almost give or take on a daily basis. There's about 260 payments a year in terms of dividends. So as that grows, there'll be almost like a daily dividend amount coming in. So essentially, those dividends will be then reinvested into then buying more of this pie. So as you can see, some of the companies are up and down, and there's only a few pounds in each one because obviously 214 quid split across 50 odd companies doesn't go particularly far individually. So hopefully over time that will grow. You can add to them in terms of topping them up and adding them more. So, for example, AGNC, an American real estate investment, I already owned 14 shares, but you can see here 13.9 of them are bought manually and 0.377 are held within the pie. And interestingly, I actually already received a dividend payment from them here on the 13th of January for 4 shares that I owned. The reason why it says 4 shares, obviously I have bought more shares, but they have a cut-off date for purchasing shares. So if you own 4 shares on, say, like the 17th of December, that will be the cut-off date for the January payment. So if you buy a load of shares on the 18th of December, then obviously you're not going to benefit for that until the following month. AGNC paying dividends on a monthly basis, as opposed to, say, another company, which if you miss that dividend date, it's called an ex-dividend date. That you may not receive that until next dividend payment, which might be yearly or 6 monthly. You have to be a little careful with the dividend X date on companies that pay annually or 6 monthly, because it often bumps up the share price artificially just before the payout, because people want to get the payout, so they dump a load of money in it in order to get the dividend. Then afterwards they might withdraw their money. So that is something for you to watch out from. So back to the overall investments. One of the top movers this particular week was actually Wells Fargo. They actually did pretty well at one point during the week on the 14th of January, and then kind of came crashing down. Still up for me overall, £1.61p or 7%. So it's quite a significant increase. But back here on Thursday, they were up quite a lot. They're now trading at £32. They were at 35 then, dollars. Sorry. One of the other companies that is up this week was actually EasyJet. Where can I find that? Here we are. So that weekly thing, you can see that is up 5.69%. No particular reason for that, other than I suspect probably the announcements to do with the testing prior to you flying back to the UK and locking down and so on in terms of travel corridors might have maybe put investors at ease that the government are doing something and they're not kind of just completely banning all international flights into the UK. Who knows? I mean, that might go down a little bit on Monday. It might have had a peak, but we'll see. At the moment, it's up 5.69% week on week. And then the other company, Uber, has done quite well. So that's up 4.2%. Again, I suspect that is probably on the news that vaccines are starting to take effect, and some of their other adventures like Uber Eats and things are beginning to turn a profit or look like they might turn a profit. It's funny that we're at $59 on Thursday, ending the week at 55, but that's still an increase over the previous week, so that's quite good. So one of the other particular increases this week was where are we? Prospect Capital here. So Prospect Capital, they are basically an investment services. So they loan money out to medium-sized businesses and buy assets and so on. So they're like a holding company. And again, their particular increase this week over last week was 7.12%. Obviously, that's one of those ones in my pies. So you can see the holding is quite small on that, but again, still nonetheless up 7%. So we're not talking monetary values. What we're looking for is the increases, and you'll see their dividend yield is 12.8%, so quite high. You shouldn't always be attracted to that because obviously dividends are optional, they can be removed. So they're not all necessarily always stable. So on to some of the top losses this week. So for me, Cineworld is down from last week by 5.9%. I'm still up on the actual share, just about, but we're back down pretty much from the week before where we were making significant profits. So that's fallen 5.9%. So one of the other fallers this week is Illinois Toolworks, who are a company who basically manufacture industrial and corporate machinery, essentially for automotive industry and various other industries, fast food, all that kind of stuff. And they are down 2.73% this week. And then the other big faller this week is actually Apple. Not too sure why they've fallen. They had a midweek high of pretty much 131, and they've ended up at $127, so down 3.79%. So overall, no significant gains and no significant losses. But as you'll see, the portfolio itself is only just about in the green at 0.29% or £2.69p return. So yeah, we did hit some sort of highs earlier in the week, where there was actually some pretty good gains, but they've actually dropped as we've got towards the end of the week. So I think we got to 2% around here somewhere. Can't quite find it because it kind of mucks up a bit when you credit money, because you kind of leap up these stages here, these sort of big jumps here when you actually credit money, because this line is actually the size of the portfolio as opposed to the gains. But anyway, just quickly turning to the non-ISA side of the portfolio. So I put some more funds into NEO at a point during the week that probably was one of the worst timings. As I always say, these videos are for educational and entertainment purposes only, so you must always take your own advice, independent advice, if you're thinking about doing anything with the stock market or investing, whether that be a SIP fund, ISA of some nature, or stock market or whatever. You need to take your own independent advice. These videos are not for direct guidance as to exactly what you should do. They are literally just what I am doing, and for your own education or entertainment purposes. So anyway, so back to NEO. So really, you'll see here that we are down quite significantly, around about £20 or 6.9%, which is quite weird really, because there was a high at some point in the week earlier where we're around 10, 11, 12%, even got to a 20% increase in the profit margin. And then I obviously put more money in, which obviously dollar cost averages up the average buy price, but unfortunately since then the share price has just gone down. One will argue that I was probably reacting to the increase, maybe. I'm not overly sure that would be fair, maybe a smidgen of that. But I do believe in electric vehicle companies as a whole, especially NIO. I think they've got a long way to go to catch up with Tesla in terms of share price and things. So um, I think that there's still a massive improvement for that. And any time that it's below kind of $60, I think that's a good, or 65 maybe, is a good buy-in time. So I've still bought below that. So if I've got spare change, maybe at the end of next week or at some point during the midweek, and it's still at 56, I'll definitely look at buying some more. So that is the overview of the portfolio for this week. If you did like the video, please do subscribe, hit the like button, share the channel about, comment below. It does really help get the channel out to a new audience, and hopefully it's just some good information for people in making their own decisions and building their own portfolios, or just a general overview of how the markets have performed this week. As I say, please do like and subscribe, and I'll see you next week. Cheers.